Welcome to the Crypto and Blockchain Talk.
Hello.
Hey.
Guten Tag.
Aloha.
Hola. Shalom.
Hello.
Namaste.
Ni hao.
Privet.
Hello.
Salut. Yassas.
Salve.
Ciao.
Bonjour. Our podcast talks about the latest trends in the worlds of cryptocurrencies and the blockchain.
Hello, everyone, and welcome to Crypto and Blockchain Talk. Today with me, I have a guy who's just flown in on the red eye, and he is going to wow us with all of these incredible things that has happened in the Miami conference. This is one of the largest conferences. Well, to be honest with you, they all say that. But he's just flown in from the conference in Miami, the Bitcoin conference, and we have with us today Tony Saliba, who is from a company called Mercury Digital Assets. So before we go any further, hello, Tony, and have you had a coffee?
Hi, Aviva. Yes, quite a few.
Are you sure? You've had enough coffee, though, because I'm going to tell you, we're going to really, really hit it hard today on this podcast.
Well, I hope so. I've got my water next to me, so that'll have to do. I'm sorry I'm so gravelly. I'm so gravelly because I literally... we were, at the conference, and then we had, dinner with some of the folks from the conference, and I pretty much, went to my room, cleaned up, and went to the airport, and was on a 5:30 flight back home, and it's really, it's been a long time since I pulled an all-nighter, but I literally pulled an all-nighter.
Well,
So.
That's the best way. That's really, there's no point in, really going to bed if, if you're already going to bed late, and you've got to get to the airport, 2 hours early still or whatever, and God only knows what else.
Yep.
And it's busy as hell in Miami. There is no point in going to bed. So you might as well have a few tequilas, a medianoche to wash it also down with, so you have some food. Then you have a Cuban coffee, which anyway will keep you wired, and you're good to go.
That's right. That's right.
So,
Well, I wasn't doing tequila. I was doing Campari's last night, and we were at an Italian restaurant, but same thing. I love them both. So,
with a name like Tony Saliba, it sounds very Italian. Did you have a really nice? You had a nice Italian, did you?
Yeah, I had a great risotto. It's delicious, Aviva. Yes, and lots of Campari, and then packed up. And you were right. It's very busy in Miami. It's unbelievably busy. Actually, there were tens of thousands of people at the conference, and it seemed to be mixing with spring break, right? So streets were packed. It was unbelievable. And then the flight was the flight. So here we are, and a little exhausted, but it was a lot of fun. I think, last year's, I guess everybody was just anxious to get out because of the lockdowns, but there was a lot of new technology there and some great speakers. Jordan Peterson spoke, and Peter Thiel, and a lot of interesting speakers. So it was well attended and a lot of buzz.
What do you think the mix was of newbies to long in the tooth kind of thing? I mean,
so that's a great question, because when we showed up Wednesday morning very early for Industry Day, the line to get in was blocks long, literally more than an hour, and we went and had a meeting, had coffee somewhere else, and came back, and the line was almost gone. And what happened is a lot of the newbies, a lot of the first-time attenders showed up and got in line and didn't realize till they got to the admission, portion, that they were there the wrong day. And I would say, so then on Industry Day, this giant, Miami Convention Center was, sparsely populated. You can move around without a problem, maybe, 10% of what capacity. But then on Thursday, it was packed. So I would say the non-industry people might have been less than a quarter of the attendees. And the balance, saw a lot of people that were just crypto enthusiasts, and and looking to find out new tips or new tools, maybe some new miners. It was a big mix, and there was a lot of very interesting displays. The midway that they have there with um, hundreds of companies were had their booths there. So it was a full on. I've been to dozens of these for 20 years on the capital market side for vendors and different conventions. And this had that kind of a feel where it was grown up. Yeah, I know, we've only been in the space for about 6 years, 5 or 6 years, ardently. But this felt like a, Wall Street convention. So,
Wow.
yeah, I met with some VCs that were just talking, that are long in the tooth, as you would say, and they were saying that this was the first year that it really felt like the institutions were bringing it. And, that may not be the best thing for some people, but it does bring more stability and different type of players, more liquidity, some better infrastructure. I mean, let's call a spade a spade. Some of the stuff needs to be taken out and upgraded. So more money getting into the space, I think, is going to be good for the industry in general.
So was it Wall Street and flip-flops you're trying to say? Because, I mean, look, this is, first of all, it's the Bitcoin crowd. Yeah, I mean, there is no dress code. But, now you're talking Miami in the mix. And then you're talking about, in some instances, a lot of money. And that's a small percentage. Let's still not go crazy here. Not everybody who's dealing in crypto, got in from day zero and was mining, and they mined, like that guy who paid 10,000 Bitcoin per pizza, who, by the way, he announced he did you see the latest interview with him? I think he's suicidal. But anyway, the whole point is that, not everyone is a crypto millionaire, billionaire, or even multi-100,000-aire. You know what I mean? It's right. a very small percentage of people who still in this, who are that solvent in this space. Do you think a lot of the newbies who were there, could you get a feel if they were there more for the technology or more for the shill? More because they thought they were going to make some quick buck? What did you get an essence of that?
Well, it's funny. So my Uber driver says, is this for, so Luis says, is this for everybody? And I said, well, yeah, I think it's for everybody. And he goes, is it free? And I said, well, no, it isn't free, Luis. So, you just can't walk in, but it's, if you pay the price of admission, it is for everybody. And he goes, well, how much is admission? And I said, well, I had an industry pass, and, it's a couple grand, maybe a little bit more, which is not for everybody, obviously. But I think the general admissions were, if you got in early enough, maybe $400 or $500. I saw them up to $800, and that also isn't for everybody. But it's 4 days. It's concerts. There's tons of giveaways. There's a lot of information, great speakers, so on and so forth. And he said, "Oh boy," he goes, "I have some crypto, and that's too expensive for me. But I have some crypto. Some of it's done really well." And I said, "Which one's that?" He goes, "Well, I bought Ether," and I said, "Ethereum," and I said, "That's great." And then he had a couple other altcoins that I wasn't really familiar with, and he said, "They're at zero right now, but I'm never going to sell." So,
you know what? Nothing like a hodler.
Yeah, right.
Yeah, God bless them all, right? Yeah. Oh my God.
I said, "Luis, you don't sell, because you know what? If everybody just doesn't sell, they'll all go back up."
Well, exactly. Well, there's a lot of stuff we're going to be covering on this pod, Tony. So
great.
Before we go into the really, really nitty-gritty of everything, I got to know, what was the swag like? Were there girls? Was the eye candy there for the men?
Oh my God,
swanning
yeah.
around
Yeah.
in bikinis. Yeah, I thought so. Because
Well, I didn't see any bikinis, but I saw a lot of really skimpy leotards and, one pieces and such.
with
Um,
a big
and
Bitcoin on it or a big
it,
Doge.
they had all sorts of different promotions on them. Um, I didn't take any pictures of them. The bull was really cool. You saw the bull, right?
Nope, didn't
Oh
see
my God.
anything. Nope.
So Trade Station, uh, that is based down there in Plantation, they commissioned a digital replica, but it's real, but it's like digitized statue of the bull that's out on Wall Street.
Right.
It's like carbon graphite with electrodes and nodes and big bolts and everything. It's really cool. And if you just do a search, you'll see it. And it was right out in front. They commissioned it, and I think they gave it to the city of Miami. And it was like everybody wanted to get their picture, in front of this bull, which was probably, I don't know, maybe 15 feet long, maybe even 20. Big, big thing. When you say how good was the swag, well, I mean, he had a lot of your usual things. They were giving away hardware wallets, and then they had,
Oh, that's not
uh,
good. Not all. Oh,
yeah,
well, that's a podcast in itself. I'll bet a lot of
yes,
those are easy to hack into. Yeah, keep going. So free
yeah,
crappy
so they
hardware wallets. Yeah.
hardware wallets,
Oh,
and then a lot of battery chargers and water bottles and thumb drives, but T-shirts. I mean, I didn't go looking for the swag. I went to see a few colleagues, former colleagues, and customers, and
you
but it was
obvious.
giant.
Wait a minute. Don't you have kids and a wife? I mean, the kids want the swag. That's why I was in.
Yeah,
But listen, none of the swag you've mentioned is sexy. So we'll go on to the meatier stuff.
yeah,
Okay.
yeah,
So
yeah.
you said you met a lot of VCs there. Yeah.
Hmm.
And I got to tell you, I was reading the news, like no doubt you have. And there's a lot of there's just a lot of really crazy stuff going on in terms of VCs also now taking part what I would say is the shilling. It's kind of like the sequel to Stephen King's The Shining. Because you have VCs who are like, yes, like for instance, so you have this gaming startup called Improbable, and VCs are saying it's worth $1 billion. Yeah, $1 billion US, right? And not to slight anybody's work, Improbable looks amazing, but it doesn't look anything different than another 1,000 projects that are out there. Yeah. But yet you have a ton of these types of projects. Hold on, I'm just messing around with our voices. Hold on a minute. So there's like a ton of these projects out there where you have VCs coming out left, right, and center, and depending obviously, and it's their project. They've now invested in it, so obviously they're going to big it up. And then you have a bunch of newbies who are, or not even so newbies, just people who want to invest in things. And sometimes I'm not so sure VCs are the best people to vet projects. I'm not even sure a lot of these VCs really, truly understand the technology underlying a lot of this stuff. So first of all, I want to ask you a
I would
question.
agree with that.
Oh, good. Okay, go for it. So I want your angle on it. Start with what you just said.
Well, so guys that I met with and talked to have a lot of money to invest. And I think the key about the space in general, anything down the blockchain, anything related to crypto, is that the thesis is that there's a general shortage to cover the demand for whatever it is, since the global reach is so huge. I mean, you have a general adoption. Think about what else it might compete with. You can't do this with equities or options or futures or things that are regulated, because there's such a barrier to get involved for those who want to make some money and be involved in something that moves and has a value proposition. This is fairly ubiquitous, right? So there are people that around the world that like my Uber driver, he said he had $4,000 in crypto. Now, he's driving an Uber. Maybe it was a gig for him and could be independently wealthy. I don't know. But people get involved in crypto before maybe they take care of some of their own actual needs, life necessities. So there's just a ubiquitousness of adoption globally that creates this shortage of supply if it's decent, or I don't want to say even mediocre, but average, it's going to get adoption, okay? And if it's really good and above average, it definitely can, go off the charts, okay? So you mentioned Doge, right? So it's a prime example. It was a joke, and it just got major adoption, and next thing you know, it's worth billions and billions of dollars. So I think the VCs, not all alike, obviously, and some are very in the weeds and understand the technology, but others just say, look, I've got 500 million to allocate. I need something that I can look to get a reasonable multiple over the next 2 or 3 years, and everybody else is plowing their money into this, so I want to be in front of that. And then mediocre to above average, slightly above average projects get the boost. And if you occasionally have a fantastic project, you're going to have a 40x, 30x times whatever revenues you get, and it's off the charts. So I can't explain it beyond that. I'm not saying that it's warranted, but to me, I'm one of the original options traders. I came down on the options floor in the 70s, and it has that feel to me. Now, the options business has exploded so much in volume from then. You can see the justification, but back then, people were like, well, why would anybody want to do this? Why is this expensive? Why is this valuable? And then the adoption just bathes over so many people. And I have that feel right now, Aviva.
That's actually really good that you have that feeling, because I'll tell you who doesn't have that feeling is Grayscale, because they just rebalanced their DeFi fund and they pushed out Sushi Swap and synthetics, right? And
yeah.
They've added 3 new crypto assets, but they've kicked out 2
established somewhat.
They're somewhat established and also decentralized. Well, I'm just wondering how decentralized they are now that I say that, but they are both decentralized exchange crypto derivatives from the decentralized exchange, which is synthetics. And then, of course, you have Sushi Swap. I'm wondering why they removed those 2. What do you feel about DeFi in general? Was DeFi a huge, obviously it must have been the hottest topic there, because DeFi is where everybody right now is camping on to make a lot of money. DeFi is huge. And this is obviously, it's going to be interesting also to watch the space. As you know, the SEC is looking for ways to regulate this. So were those kinds of topics discussed in Miami?
I didn't hear anyone speaking about DeFi specifically, not in the circles I was running in. And I'm sure somebody on the dais in the prepared speakers did. But my experience is that it's expensive. The gas to trade on DeFi is very expensive, and then also I come from a market making background, and on an exchange, on a centralized exchange, you typically have an entity or a series of bots or some mechanisms to maintain liquidity. And on DeFi, at least my experience, because we practice with our token, it's an algorithm that you create, and then you cross your fingers. So prices can get out of control faster, both ways, up and down. And so my experience hasn't been that great. maybe it needs more tweaking, but it is easy and it's just a little bit more expensive. I think, we were paying like 7%, which is just insane. I agree with you. The SEC is looking to regulate where they can for a number of reasons, some good, some still questionable, but that wasn't, that was a big buzz that I ran into.
Well, that's interesting in itself. I wonder if anyone really cares at this point. I wonder if people care until it hits them. You know what I mean?
Yeah. You have two basic types of groups that are trying to make money. Investors that are trying to, the next great thing that's going to win and increase in value as companies or as, solutions. And then you have people that are looking for tokens that are going to move. And, DeFi was a thing and now it's become more of a utility. How it gets, adopted and connected, we'll see. We're all about the network effect. I think the more, we're connecting groups and users and liquidity providers and agents that are bringing new people into the space, the better. Nobody who's going to do large size is just going to go on a screen and click large amounts of money. They want to talk to somebody first, and then they get comfortable, and then I'm talking about funds that need to allocate, because a lot of funds are now being mandated to put some percentage to work in some digital assets, and that mouth of that adoption, that's Wall Street, that's capital markets. I'm very familiar with that process, and I think those, as I said, the network effect, connecting everybody, where it's an ease of workflow automation and a better liquidity and lower prices and lower costs. So that, I see that big names are now, 3 years ago, we're not ready, we're going to our board, and now they're like, timing couldn't be better. Our customers are voting with their feet. We need to be there. We need a custody solution. We need settlement. We need liquidity. So it's happening. We will talk in 6 months, and I'll tell you exactly how much more it's happened.
Well, yeah. So let's just talk for a minute about what it is that you do, or I should say what your company, Mercury Digital Assets, does, sure, as well as what you do. So let's talk about that before we get into some other topics which are going to be heavily related to what you're doing. Because from what I understand, you're really supplying now. If we're doing elevator pitch, let's see if I can do your elevator pitch. Is it that you are supplying white labeled solutions to institutional investors and organizations?
Perfect. Organizations was the word I was looking for.
See,
absolutely.
I nailed it. I got my elevator pitch down flat. That means that I've now got a promotion. Thank you. Okay, so go for it.
Aviva, that was perfect. I was waiting for that last word, and you said organizations.
There you go.
And that's it. Yes, we sell pickaxes and shovels to the miners, and that has a double entendre in this space because we actually do have miners, but
I need a set of drumsticks and a drum. I needed to do the, you know what I mean? Like, you just told that great joke. Damn.
Sorry, but my history is doing what we do in the listed options space, where there's a lot of data. Options are instruments that can be risky, so you have to be careful. Fat finger errors can cost, and there's a lot of movement. We call it, you slice and dice orders up to find the proper liquidity and so on and so forth. So all of that functionality, and, I'm going to try to make it, as mundane as possible. Basically, that has to happen when an industry starts to grow up. And what you had in the first 10 years was a lot of smart people but also individuals and not so many institutions in the crypto side. And that is kind of the reverse of the dot-com era, where you had a lot of businesses go in and then the individuals got in kind of late when it was frothy and there was a bubble and the market, the bubble popped and the market crashed. So we're seeing the institutions come in later now because their clients are demanding it. And we build out systems to allow them to find different liquidity centers, route to market makers and OTC, as I say, workflow automation on the desk so they can handle a lot of different customers that are either calling in or texting in or coming in some way that the agent is required to manage the order. And you have an additional sort of mysterious spookiness with crypto because the settlement is a little circuitous compared to the capital markets. And not everybody has the same custody solution. So the whales, if you will, and they're not yet whales in crypto, but they're whales in their own right in the security side, typical capital markets investing. They need these on-ramps that involve agents or individual people, men and women who are their jobbers until they feel comfortable. And when you're committing 1 or 2 or 5% of your capital, it doesn't usually warrant having your own person doing it for you. So that is a big business right now. That is, so we started in 2017 because I saw this as a need, and we were way too early. And as recently as 2019, people were in this side of the market were only nibbling. And last year, it started changing dramatically. And this year, it's almost like the dam is broke, where everyone that we talk to from the capital market side, Wall Streeters, if you will, say, you couldn't be better. This is, we need to do this. And we speak their language. We've done it in futures and options and equities in the past, so we understand how to handle big data, mission critical data that gets reported, to your AML, KYC, all the way to best execution reporting. All those buzz phrases that Wall Street needs and embraces has not really been evident in the crypto side until the last year or two, and very, very small, and now bigger and bigger. And there's not a lot of firms that do what we do.
Can you talk about any of your big projects or what's coming up? I mean, you went to Miami for a reason. Did something big and beautiful come out of that? Or go on, that laugh is giving it all away. Go on, spill the beans.
There was a rollout of a white label version of our platform with a very large OTC desk. And I don't want to, be a tease and a spoiler, but I
you wouldn't
really
be
would
the first.
I didn't want to talk to you about that because there's so many other general and really good things. But yes, we rolled out, our client did, for their thousands of institutional customers, a full mobile front end to back end solution that gives their customers, high grade, institutional grade technology to trade on. No more e-commerce, web automation tools that so many shops brought to market in the early days, which was fine. And that's all that was needed. Now it's, being upgraded. So that was one of the reasons. And then, as I mentioned to you earlier, we are very close to rolling out a solution for individuals that will give them the ability to trade directly with the source, where their cost to doing business is cut into a sliver of what they're paying on the lit venues on Coinbase and other lit exchanges. So that's something that we're going to be advertising in May and make it available to the everyman with great tools and great services. And we have a token to go along with that. So the Merc is a utility token that allows our institutional clients to get a discount on their invoices, but it also allows the individuals for this solution that I just mentioned to get a discount, but also a really cool software tool set with charting and algos, signal generation, all just for staking some of the tokens, and then it's free from then on. So we'll be dropping that hopefully by the end of the month. Hopefully it'll be listed on SEX, as you said.
Very good. Yes. And for our listeners, SEX is CEX. Yeah, SEX.
Yeah.
So it could, no doubt everyone's got sex on their mind. Hopefully it'll be this kind of sex. So okay.
I love it. That's great. That's great.
So, I don't know if you also saw this. I mean, let's just talk for a minute about institutional investors, and they're, again, kind of mirroring what I was saying about VCs. And I understand institutional investors are getting into the crypto space because of the pressure by their clients and customers, et cetera. But what also is the learning curve there? How's that going with institutions? Do people really care about the actual blockchain in itself and how that whole mechanism works, or is it they just care about the crypto side? And if it's because it's a very volatile thing still. I mean,
yes.
Crypto is so volatile. Even with like this, and we'll talk about Robinhood, what Robinhood are doing in a minute. Plus, we'll talk about Shopify in just a moment. But, even with a lot of amazing news pieces, which you thought would have skyrocketed Bitcoin, for instance, I'll give you four instances. So when Russia said that they were looking into taking Bitcoin for payments for their oil and gas, the minute they did that, I thought to myself, well, if there was ever a movement that was going to be made, it would be now. That would be number one. And then, of course, number two, with Terra and doing their new stable coin, they're trying to like buff up their treasury to like 10 billion Bitcoin. They've only bought like 1 and change billion in Bitcoin so far. I thought, okay, well, it'll be interesting to see what the space does. But, if you look at what's happening with Bitcoin, and it probably has to do with the news. There's a lot of news right now about the economy's about to tank. I mean, I just read,
right.
And I don't know about you, Tony, I read the news from all over the world. I even get it translated. So I don't take because I need to have a holistic view. I'm the kind of person, I'm a really weird child. I've been like this my whole life. I can't just hear it from one side. I've got to look at all sides of the story to come to what I think. They say there's three truths. It's your truth, my truth, and the real truth. So it's somewhere in the middle kind of thing. So so I'm like sitting here reading articles and translating them from different languages so I could get these holistic pictures, and we'll talk about that in a moment. But what is driving at this point in time when Bitcoin is really having a problem maintaining or getting past, these stop points? What is making an institutional investor right now saying to themselves, it's a good time to buy this cryptocurrency stuff. We should be buying this crypto stuff. So what is the driver?
Yeah, great question. Because there is an answer to that question. It's different depending on the portion of the industry you're talking about. If you're talking about custody shops, custody houses, Northern Trust, State Street, to name a couple that do custody for their equity and other regulated securities, they want to do the business for their customers that over the years have said, okay, the individuals are deciding which tokens they want to hold, and it doesn't matter to the custody agents. They want to be able to do that business for them. I mean, it's a convenience for the investor to have it all in one place. Shops like that have institutional clients and large, family office clients and individuals. So when they're voting with their feet, they're demanding, they're putting in demand. You need to be able to do these services. I need to be able to look at my portfolio and see my U.S. and international equity position along with some level of digital asset commitment that I'm making. Okay, now why are they making commitments? The other part of your question was, what, as I said, I knew about Bitcoin right away. I was fortunate enough to have a head of research where I worked, or, as a partner at a large company that my head of research started writing about Bitcoin in 2009. I just read everything he wrote every morning at a morning newsletter. And Nicholas, shout out to Nicholas. And I was like, cool, I'm going to wrap my head around this. I think I did. And by the end of 2010, I'm like, I got this. And then I just put it aside and forgot about it for 7 years. I was involved at all. But right in the beginning, I said, okay, this is pretty interesting. I understand the accounting fact blockchain and all that. And I hope it does well. And, I should have just bought a couple Bitcoins and I would have been, fine. But then, exactly. But I went on my merry $2,000. So, well, wait a minute, this is serious, and these entities, these institutions, these companies, and the whole infrastructure from individuals, family offices, money managers that need infrastructure, we're going to need what we did. Okay, now those parties are who made the decision to say, well, I should at least have something in the space, 1%, 5%, whatever. And as that became more and more ubiquitous, the middle groups, the prime brokers, the custody shops, the vendors that bring them data and everything, needed to get up to speed and be able to provide the solution to their legacy customers. So the legacy investor group, is awake and getting involved and demanding more than the industry has to offer it right now in terms of the tools, the reporting tools, the execution tools, the evaluation tools that they're used to. And it's really boring, to a great degree, except it isn't boring when you talk about being able to trade all these great products in these cross-linked pairs. And our forte, Aviva, is the options. So, the action on Deribit, the action on FTX comes to the U.S. when the SEC allows that to happen. It's going to be, and we're ready for it. So, crypto was made for options, or vice versa. It's just a great trading tool.
With that, though, in mind, and being the great trading tool that it is, how would that piece fit should a recession hit?
Okay, great point. So I think what you're touching on, and accurately so, regarding the masses, and I think I might have said this on the top of the conversation or before we started recording, they're just people that are owning crypto before. It's similar to just taking your paycheck to the gas station every week and buying some lottery tickets. The difference is crypto lasts a lot longer. Some of these tokens, right? I'm not painting a broad brush, but the individuals that exhibit that type of behavior, if there is a extreme recession that hits, I think right now the inflation that we're being dealt is horrendous. This hurts families and average common people tremendously. So your thesis is that they're going to have to, liquidate because the economy will get so bad. I look at it as pricing gets so bad with regard to inflated prices that they may have to lighten up. Now, problem is in 2020 and 2021, governments all around the world airdropped trillions of dollars. So there's still that money washing through the system to some degree. And anybody who, put it in the stock market or put it in certain crypto probably has more than when they started. So there's that. But I hear what you're saying, and I think there's a lot of truth to it that if the recession hits and it's bad, you might see unloading is what you're getting at. And I agree with that.
Yeah, and so basically, listeners, what Tony is referring to is we did cheat a little. We had a little conversation before this podcast started, and I did say, when recession hits, people tend to cash in and run. But, this is the other thing I want to see. And I have to remind everyone that I'm the eternal optimist. And I do believe that you can talk yourself into a recession. And I do find it interesting because I'm pretty sure. Now I just want to point something out to everyone, just to paint a picture for everyone about the experts that are out there. So B of A has warned, and this is of 2 hours ago, newsflash, a recession shock is coming, says B of A. But hold on to your seats, folks, because listen to this. Deutsche Bank thinks that next year a recession is going to hit. But hold on a minute, because then you have a whole host of other investors and other people who think it's going to hit in 2024. And there's actually a chart which was then generated because I started to then read a lot more articles, and somebody actually generated a chart of all these institutions, all these bankers, all these financial houses. And they actually said, okay, well, 14.9% of these experts in the money industries think, so 15% think it's going to happen this year, recession this year. 48% think it's going to happen next year. 20% think it's going to happen in 2024. And 16% or somewhere around there think it's going to happen in 2025 or later. So what I think the take-home message I'm trying to give everyone is that nobody knows what the beep is going on here. So, what I don't want people to do, because we've lived in panic for so long, first, as we all know, with COVID, and then, there's always a panic. If there's not a panic, to be honest with you, I only really read financial news. I don't even look at other news anymore because I'm not joking, people. It's just not good for you. You just need to know there's a war going on. You can guess what happens in a war. We all know there's COVID. You can guess what happens with COVID. You don't have to have this shoved down your throats all the time. Financially, obviously, because of this podcast, I like to have a finger on the pulse. So, but, you just have to remember that no one really has a concrete indication of exactly when a recession is going to hit. But, how does that affect you? Tony, when you guys are when people are saying to you, hey, listen, you've been in this industry for a while, what do you say to them when they say to you, hey, listen, do you think a recession's on the horizon? What do you say?
Well, so you're spot on this. Recessions are usually determined, in hindsight. I mean, you can forecast them like the three groups for firms that you mentioned are warning, but then a recession is 3 or more quarters contraction of no growth or negative growth in the economy. So you only know that after it's happened, and you look back and you see that these quarters are back to back to back, and now, oh shit, we've been in a recession for, but some people, look, a recession is what it feels like to you. So when they're talking about we're going to go into a recession, and the classical definition of a recession is nationally, that doesn't mean people haven't been hurting, on their own for months already. I think you have, gasoline prices, which affect every single thing in our lives because they have to be either shipped or produced, and fuel, energy is going to touch it. So you have a jump in prices across the board. Staples that everyone needs generally every day or every week, bread, milk, cereal, whatever is more expensive. So there is a problem right now that the individual might say, well, heck with you guys. I feel like the recession's been going on for 6 months. So to get back to the initial thesis of what is that going to mean to crypto, those people that are being hurt today that are the every man and every woman, if they're not in crypto, that isn't going to matter to the price of any noticeable a change of any noticeable crypto prices. But for speculators who may be overextended, you could see some liquidation just to pay for normal things. I'm bullish just because of the general, and I think like the big three are they're not going to have problems going forward. I don't think you're going to see a big liquidation in Bitcoin, Ether, or Solana. I think you're going to see them to continue to be strong because they're kind of institutional grade. So those clients of my clients that are getting their toes in, that's where they start. And they have much more staying power. And they're typically buying for funds or customers too. Everybody wants to have a nexus to this. Now, do the headliners pull up the other alts? Well, we'll see. But I think your notion is spot on. I just don't know how much, it's going to impact the headline pricing. And I'm not a market caller.
Well, no. But I will actually put this right. This is what I'm going to say right now. I'll do a disclaimer, actually. So everything that Tony and I are talking about on this podcast cannot possibly be construed as investment advice, folks. You have to go and do your own homework, your own due diligence, and your own research. It's all down to you. And if you don't understand what is happening after everything that you're reading, go find yourself a professional financial advisor who hopefully is well versed enough in crypto to explain it to you. But remember, do your homework. So anyway, going back to
you're spot on.
Yeah. Absolutely. It's the only thing you really can say to people because the volatility is killer. Absolutely killer. And
you know what?
Yeah.
So like I said, we just finished our friends and family round for our token, the Merc. And I literally went out to friends and family because I had a business in the early part of this century, and I sold it in 2007 for a big number. And I had members of my family that were mad at me because I didn't include them. But I have a lot of brothers and a sister. And I'm like, I didn't know it was going to be a success. And you didn't necessarily would have wanted to take the risk early on. So this time I tapped everybody on the shoulder. We contacted everybody. And the permeating theme was only invest what you can lose because this could go to zero. You could lose everything. Mm-hmm. And believe it or not, they said, you're right. And I'll take a pass or here's $5,000 or whatever. And that's what you have to do. And then sometimes you wake up and say, wow, I backed a winner and that's really good. And next time I'll do a little more homework and maybe invest a little bit more. But you're hitting on the nail on the head. It's very volatile. And nobody should be betting their mortgage payments, right?
Well, yeah, and this is also something we talked about before we went on air. Because one thing I can't stand, there's more than one thing I can't stand. I shouldn't say that. All my listeners know me well enough to know there's plenty of crap I just cannot stand. Obviously, the biggest one is scams, cons, hacks, phishing, this kind of stuff. Well, actually, not all hacks are bad hacks, but we're not going to go into that. I'm talking about the bad stuff. I cannot stand cons and scams. That's number one. Number two, shill. I can't understand people who shill, especially famous people who don't know what they're talking about. Okay?
Oh, boy. Yeah.
And that just drives me nuts because they have followers. They also, with certain powers comes responsibility. And when you're shilling to people who don't understand what the space is about, and then they lose their money. Those rich and famous people don't give a monkeys about you folks. They don't. Believe it or not, we do here. We do care. So the whole thing I was saying to Tony before we started broadcasting was, I'm willing to bet money that a minimum of, let's say, 100 people, I didn't quantify it before, but I will now, after the Bitcoin conference in Miami, went out, took out loans, remortgaged, did something stupid, and they've put it all on some kind of beep coin or whatever they've done, all because somebody's convinced them and they didn't do their homework, and it's going to end in tears. And folks, we don't want that to be you. But what I will say is this, just to go on to a segue here. So I don't know if you know about this news, but Robinhood has rolled out these crypto wallets to their over 2 million strong wait list. Yeah? And did you know about this? So Robinhood is now, Robinhood has rolled out crypto wallets, and Robinhood is centralized, as far as I know, unless you know something I don't know, Tony. Nope. But it's essentially this is a crazy, crazy time here, folks. So, except, by the way, to people in 3 states. And the 3 states that they did not roll this out to are people in Hawaii and Nevada. And probably, and I don't know the real reasons, and I have to look into it, perhaps it's because, Tether be involved. Because as you know, in New York, Tether's a big no-no. And I'm waiting to see where the other shoe drops the more the SEC gets involved. But that's another podcast.
New York's BIT license is the hardest. Hawaii is next, and then Nevada. So you can get licenses in 47 states really easy, like with one application. Those 3 are tough. So maybe that has something to do with it.
Anyway, I like your answer. That's let's go with that one. Their crypto wallets are going to allow their customers to send and receive crypto now, and even buy NFTs. Oh, there's no shock there. Another NFT trading platform. Who's not doing NFTs now? Everybody thinks they're going to be the next Beeple. So they're also adding the Bitcoin Lightning Network, which, by the way, also just raised from, I think it was also VC led, like another 80 million. I don't remember the exact number. It's somewhere around there for the platform for the off-chain transactions. I just wanted to know, what do you think about that? What's your opinion on this?
One thing I will say, it is centralized, and I'll need to dig in to see what the secret sauce is besides giving away wallets to get like an intro for their user group to start trading crypto. I know that Robinhood has come a long way in the last couple 3 years with regard to their stability, but they haven't come all the way. They have options. And I'm talking about from the options side, which options are quite similar in a number of ways to tokens because they're volatile and there's a lot of data being pumped through. Hopefully Robinhood has fortified their network that they don't have those problems. But dropping, 2 million plus wallets doesn't mean that all those users are going to, start trading on them right away, load them up and trade. But I'm glad you mentioned this because I didn't see this. And Robinhood's it's a good company. It's a customer of my broker dealer. They use some of our services. They spread it around since they're so big. They use a lot of different brokers to help provide liquidity. But I didn't see this. I'm going to dig in and I'll have a more informed opinion shortly.
Well, I tell you what, don't worry. Next time we do a podcast, which I hope you'll come on again, I'll send you a full list of links and then we can, I'll give you some time to read up.
I love it. I'm going to consume so much of your podcast going forward now, Aviva, just because I love the way you treat your audience too, because you need to be careful. Like you said, you're an optimist. I'm an optimist, but you do need to be careful and wade through this wonderful new land, newish of great ideas. The metaverse was discussed a lot at the conference, and different ways that's going to impact our lives. So there's a lot of really new and interesting things that are happening, and you do need to be careful.
Well, absolutely. And the problem I have with Robinhood sending out wallets is that, hackers ain't stupid. And, hackers only a couple of days ago, they breached MailChimp to phish cryptocurrency wallets. It was mainly users of Trezor hardware wallets that were sent these sophisticated phishing emails. And when users of the Trezor hardware were saying that they were being targeted, it was confirmed that a lot of people were part of this. They'd fallen for it. They'd been part of this scam. They weren't educated enough. And of course, then you also have other examples of hackers breaching centralized wallets. And
like wormhole.
It's So I mean, there's just so many. With, of course, this MailChimp one just being the most recent one. Well, there's probably one that's even happened today, which would make it even more relevant, but we don't know about it yet. But we just have to be really careful when giving people also these wallets, because they have to understand everything about the security, and the security not just of the wallet, but, the entire platform. And when something is centralized, that's when you're really asking for it. But the other thing I wanted to kind of just touch upon, the very last thing, is about Shopify. Shopify have actually said that they are going to, through the payment app Strike, they are going to allow for customers to offload their Bitcoin without having to go through KYC.
Oh.
Okay.
Okay.
So, which of course is making a lot of people sit up, especially in the legal arenas. And of course, I think the SEC are also going to pay attention to this, which means that if you can offload your Bitcoin without KYC, it's a whole new world for.
Okay, so I will depart a bit on that caution for this reason, and that is everything we do with our clients is fiat. And what I mean, everything we do in terms of AML, KYC is fiat to crypto. Once you're in crypto, you pretty much get a pass to open other accounts or move around within the crypto space, because the on-ramp is a one-time on-ramp. And if you think about it, Shopify wants to sell their goods, and if you have crypto, and I happen to know now that you mention it, I understand what you're talking about. Strike is doing that. It's a Chicago-based company, really bright guy, Jack Mallers. So once you already have your crypto, to buy stuff on Shopify without AML, KYC does not seem to be going against the flow. That's my gut, my take on it. It's about the on-ramp of exchanging. I know some young people that say I'm against crypto because it impacts human trafficking, facilitates human trafficking. And I'm like, come on.
Yeah.
Human trafficking for the last, 100 years has been done with fiat.
Exactly.
It's horrid and horrendous practice, but it isn't crypto that's facilitating.
Absolutely.
Okay.
Not.
So I think that when it comes to the SEC, I have an opinion that there's three things that the SEC is focused on. One is dark money, so the AML KYC is super important, and I'm 100% with them on that. Two is what you say, which is awesome, and you call it shilling, and they call it solicitation. Okay, okay. They are really attenuated to over solicitation to the masses, and I totally agree with that too. Same, one and the same, shilling and overly soliciting. And the third, though, is they need a piece of the action on every transaction. So they want to tax us, right? So those are the three things I think they're going to be focused on. And if you're moving your dollars into crypto, there's needs to be a on-ramp that does your AML KYC. And I think Shopify is going to be a winner on this one. That's my 2 cents.
That's why I ask your opinion, because you are a man in the know. Well,
thank you, Aviva. Appreciate it.
Tony, I think I've enjoyed this podcast very, very much. You're a man who really has amazing insight, excellent education, valuable input, and I would love to have you back on again. Say yes.
I'm flattered. Yes, I appreciate that. I'm honored and flattered, and I'm a fan. And we'll prep a little bit and we'll cover all your topics in even more depth and detail.
Oh, well, you know what? I'll have to pick out some really good stories then. Well, listen, again, thanks for coming on. And I want you to be sure that next time I want you to crack open some really juicy things that are happening that are like, we're the first people to kind of release it because our audience loves that.
I will.
I would like to thank everyone for tuning into this week's Crypto and Blockchain Talk. Please remember to tell your friends and family to download this podcast on over 70 different podcasting platforms. A partial list is on cryptoandblockchaintalk.com, but if you want to know right now which one is where you are sitting at, because of course we don't have every podcasting platform listed, just put Crypto and Blockchain Talk into your Google search or whatever search. In addition, these beautiful podcasts are streamed on our sister radio station, Crypto24radio.com. Crypto24radio.com plays news, music, and more 24/7 around the world. We love to hear from you, and of course, we have our social media accounts on Facebook, Twitter, and Instagram. But what we do love most of all is to hear from you directly, so please email us at education@savvydigital.com. That's education@savvy, SAVII digital.com. Again, we know you have a lot of choice when it comes to who you listen to on a podcast, and we know your time is valuable. So when you tune into us, it means the world. So please be safe, take care, and goodbye for now.